Guys, one of the easiest strategies that gave me a breakthrough in my trading, and then I was like, yes, I know how to trade that. That was demand and supply because it's easy to be identified. So guys, let me first do for you an illustration so that you can know what demand and supply is. So again, we say demand is aggressive buying. So every time when you have price coming down, let's say like this is price coming down, just like this. This is then we have price reversing with big momentum, just like this. You see that? Then we have another big candle because we always want to look out for 3 big candles. We don't want to look for 2 candles. So then it's going to make this our zone. So meaning when price comes back here, it's going to bounce off and then go back to the upper side because this is a demand zone. The opposite is the supply zone. So when you have price coming up like this, there is low momentum in buying, then price starts dropping with momentum, just like this, you see? Just like this. Then makes this our previous zone a supply zone. The price is going to come back here and then drop off. You see, traders? So this is what we are going to be looking for. And then I have a special one for you at the end of the video, guys. So let's jump into the real video. So the first thing we're going to be looking at supply. That we're going to be looking at supply. So as you can see, this is our market. Again, price action, you just have to look for where we see aggressive selling and aggressive buying, and just mark there your zones. So where do you see aggressive selling? Right here we see aggressive selling to the downside. As you can see, we have 1, 2, 3, 4, 5, 6 candles, aggressive candles, as you can see, selling candles, which makes this previous candle, the blue one, our supply zone. Again, because we have 1, 2, 3, 4, 5, 6 big candles, aggressive selling. So what you do, you mark it out. And guys, we are on the 1 hour time frame. And those of my live, I like to use the 1 hour time frame. It's best time frame for demand and supply plus the 4 hours. So guys, I'm going to mark out this previous candle here. So everyone has the way they mark it out. So me, I'm going to mark it out here and here. Some people mark out the full candle, but if you want, you can mark out just the body. Me, have marked out only the body. So this is what we have, as you can see, traders. So make sure whenever you draw this zone, you just have to drag it to the future, just like this, for purpose, as you can see. So the more I drag it to this side, the more you can see that price has been up to there. So actually, let's keep on dragging it, as you can see. Boom. Now traders, this is our supply zone. So this is our supply zone, this one right here. Again, we said at a supply zone is where we have price selling aggressively, but when price sells aggressively, it's always going to leave a zone. So this is the zone where if price ever comes back there, we are going to see people selling at that price. So you can see we had news that came in with much volatility. So most of the times whenever you see demand and supply, it's always news that comes back to these zones most of the times. And I'm going to be showing you that. Boom, you see this candle here, price comes up, taps into our supply zone. Then on the next candle, price drops. As you can see, anyone would literally see this. You see, price taps in here, rejects. This is a big rejection candle, as you can see right here. So price drops just like this. Now let me show you how you take a trade at a point like this. Let's zoom into the smaller time frame. So what I always like to do, traders, is always use smaller time frames to take my trades. Now on my small time frame, this is what I have. This is my 15 minutes time frame, as you can see, traders. This is my 15 minutes time frame. So what do I have? The first thing I have, price shooting up with momentum like this. You see, it shoots up with momentum, it comes back and closes from outside like this. Then these other candles try to go up. You see these traders, but they come back down, as you can see. And then this other candle closes from back inside, meaning this was all the fake out. If we had even something like a resistance zone right here, price respected our zones. It didn't really break it, so this was more of a fake out in here. You see, price closed from back in here, because when you check our big time frame, you're going to see that this is all weak rejection, as you have seen on the 1 hour time frame. So I take my trade always whenever price breaks and pulls back. So meaning I would have waited for this candle here to close from back in here the way it did. Then I wait for this pullback to the zone here. So this is where I was taking my trade and then putting my stop loss either here or even up here. So let's measure out how much would be risky and how much would be our target. So you choose your measure tool just like this. So I would be taking my trade exactly at this level right here. So we select our short position. So taking my trade exactly at this level right here, putting my stop loss just up here. As you can see, most of you know me, I always risk 30 pips in the market, then my target is always doubling. So again, we always want to look out for a major zone in the market. So you have to zoom out. So as you can see, so what is our major zone? Our major zone is the one that you see right here, traders. As you can see, this one right here. So you can see this would be our most recent zone where price reached, and then it had hard time. So this, which is our resistance, you can see price, this would be our resistance. You can see I will be taking my take profit from here, which is how many pips? Again, this is 77 pips, which is very good, guys. 30 pips to make 77 pips. This is how you take a trade on supply. So I'm going to show you example number 2. Example number 2 is here, right here, traders. Again, you see price shoots up with momentum up to the highest point up here, just to wipe out people's liquidity, to grab more liquidity, as you can see right up here, price. But again, what does price do? Price pulls back in here and respects this supply zone that we had. You can see, traders, what do? I always take my trade on the next candle. I just use the same strategy. I zoom into my small time frames and then look for my confirmations. Since now you see this zone here, traders, this zone here, it even acts as our resistance. So I always like to see price close back from in here, and then I take my trade. So I would be taking my trade here, and then again putting my take profit here. As you can see, price dropped up to down here, traders. So again, let's do another example. Let's do one more example. And even before we do another example, traders, when I zoom out like this, you can see what I did. I drew this supply zone and I extended it in my future, so that if price ever comes back there, it's always going to respect that level. So this is what I'm trying to mean. When I zoom out like this and scroll this side, and then let's say zoom in a little bit, this is what I'm trying to mean, traders. Look at this. This is the beauty of supply and demand. So this was our supply zone from this was June, the 20th of June, this here. Price comes back here, I take my trade. Price comes back here, I take my sell trade. And look what happens when price came back here. This was today. Price went as high as that zone and it respected it and then started dropping. This is the beauty of demand and supply. This was supply. Now let's look at demand. So guys, we're going to be looking at demand and supply just on one forex pair. This can apply on any forex pair, but I'm only looking at GBP USD. So when I zoom in today, I took a trade today, guys, and that was off, and I made crazy amounts of money, which I'm going to be showing you also. You see the screenshots here. I took a buy of GBP USD. So the next thing, how do we trade demand? So there are many ways we trade demand. Again, we can mark out aggressive in the previous zone, which is the aggressive buying, the previous candle after the aggressive buying, or we can mark out a consolidation. So anytime when you see consolidation in your forex market, that means orders are being accumulated, so that price can break out, retest, and then shoot back to the upper side. But every time when price breaks out, it comes back to retest at that zone there. That zone becomes our demand zone. So this is what I'm trying to mean. The zone that you see here that I marked out already was my demand zone, and also price had given us this consolidation in here, which was also, that looked as it looked more like a double bottom, but again, if I don't want to confuse myself, I'm just going to call it my demand zone. And how do you mark it out? So let's remove this here. You can even see I already have even my things. I had written the word demand there because I had taken the trade. I even made a video for my people in my mentorship. So this is what we have. You can see when I zoom in well like this, you're going to see that we had this nice consolidation. So how does a consolidation look like? This is what we call a consolidation. Price is moving in a fixed zone, just like this. So this makes this our, when you mark it out like this, you just make sure to drag it into future, just like this. You see, you make just like this. So when you draw out your consolidation, traders, wait for price to break out. Most of the cases you're going to see price come back and retest inside. So this was our retest. As you can see, we had the breakout with 1, 2, 3, 4 big momentum candles, and look at the pullback. Price pulls back. So in here, you are receiving two types of demand. We have the consolidation one, and then we have the aggressive one. So we have the aggressive where price is moving 1, 2, 3 candles, and then you have where price is coming back to the. We also have the one for consolidation. So if you don't know how to mark out the previous candle, you can literally just mark out the consolidation. This is the consolidation that I'm trying to mean. You can see. So when price consolidated, it broke out with 4 big candles, and then we had price pull back into our zone, which was, and again, if you have to mark out only this candle right here, this one, still would be a demand zone. Again, when you see such a thing, traders, you can see price came back and pulled in up to here and pulled back, and then this other candle started pulling back up. So again, you always take your trade from the next candle. So you take your trade from here. So here we're going in for long positions. So I take my trade on this candle here, putting my target again. I'm looking at my previous supply zone. That's where I'm putting my target, and then put my stop loss exactly there. You can see, traders, risking only 14 pips to make 71 pips. Demand and supply, the craziest price action concept. The craziest price action concept. Look at this, traders. Again, price, when it reached our supply zone from June, price starts dropping, you see, until it came back up to the demand zone that I drew today. Like, you know, price drops, goes beyond our supply, our demand zone, but again, it pulls back and closes inside our zone. Anyone will take a trade here, make money, guys. So this is what we call demand and supply. I'm going to be bringing in more videos like this, so that you can understand that price action is the king of analyzing charts. Price action is the king when it comes to analyzing forex charts, guys. So you can do this on 1 hour time frame. Look for your confirmations on smaller time frames. You can use it on the 4 hour time frames, and you're going to always have price respecting your orders. And don't forget always to check the news first. So you may be taken out by news, because you have seen how big these candles can really drop. They can take out your stop loss, because whenever I'm trading supply and demand, I also like to risk 30 pips, you know. I don't risk more than, you know, I don't risk more. So guys, if you have enjoyed this video, make sure to subscribe, turn on the notification bell so that you never miss out whenever I post a video, guys. Trading in the forex market is very easy as long as you follow the recipe, guys. Take this. Trading is just like cooking. When you're learning how to cook food, traders, you're going to always first follow a recipe. The first time when you cook, your food is going to be disgusting. You're not going to cook good food. But after some time, you're going to grasp the recipe in your head, and then you're going to be following what's in your head. You no longer need the recipe, because when you're learning, the recipe is going to be in your book. But after, the recipe is going to be in your head. So when you learn the recipe and you're following everything, success is going to be guaranteed. Same to trading. Success in the forex market is always guaranteed if you only follow the recipe of trading. Success is not guaranteed if you break your rules, if you don't follow what people have written. The greatest traders have followed their same recipe, and all these things are laid out. I'll see you in my next video. Make sure to subscribe, and I'll see you. Bye-bye.